JJ, thank you so much for joining me and joining an episode of Making Risk Flow. I'm really excited about this conversation. Can we start with a brief overview of kind of your current role and your background, please?
Yes, in terms of background, Juan, I've worked for over 25 years in the reinsurance industry. So a long time ago, spent almost 2 decades at Swiss Re in various positions over time in Zurich, in Canada as well. And then joined Hannover Re in 2019, where I was the CEO for exactly 6 years. Very interesting time for us, a difficult time because the pandemic happened during my tenure, but also very successful time with a fantastic experience for me personally. But I decided to go into a new chapter this year, and from May onwards, I've started building up a portfolio of non-executive directors and advisory roles. I'm still in that process, and very happy to have a little bit more time for myself, but also to stay connected with the industry. So that's me in a nutshell.
And then obviously your executive background is on, as you mentioned, is mostly reinsurance, but now in your non-executive roles, you are with, you're chairman of BMS, so involved on the broking side. You're also non-exec with Brit, which is a London market syndicate, April. So you've kind of expanded your impact across the whole value chain, right? From broker to insurer to reinsurer. So would love to hear more about like what excites you about different players in the value chain. How are they different, and how, to what extent do they have different priorities?
Yeah, no, that's very much the big advantage of having a portfolio of activities. You have different vantage points, and the industry always fascinated me, frankly speaking, because of its societal relevance, and I really enjoyed everything I did in a position as a risk carrier all the time, and now I can broaden a bit the scope. What I see is clearly commonalities across the different segments, whether you're a broker or a risk carrier. You have very similar concerns and issues. There's an overwhelming goal and purpose to be relevant, to increase resilience in society. So this is not different across companies, but clearly there are some slight differences. The broker side is obviously more focused on distribution, on access to the risk, on creating new opportunities and pushing the barriers of insurability. So there's an opportunity side to it, but the risk takers obviously need to take a different stance. This is all about underwriting, quality, discipline, the focus on portfolio management. But I think the two views are very much complementary, and I learn a lot through that. So clearly cultural differences, but common goal as an industry.
And one of the things you've mentioned there is like relevancy, and I assume there are different levels of relevancy, right? It's like the relevancy of the insurance industry as a whole, and then as you go down, what's the relevancy of different segments or actors in the value chain? So, yeah, what do you mean by relevancy? How do you think about relevancy as an industry and for each other players?
Yeah, no, this is very much at the core of what I'm trying to do now. I think the relevance as an industry is relatively clear. I think it's about absorbing risks to enable growth, to enable prosperity. It's about rebuilding after shock events. In short, it's about creating resilience in a societal way. And that is clear. What is also clear is that relevance is not a given. The risk landscape is evolving. There are changes. technology is changing, so there is a need to adapt. There is a need to work on updated value proposition of the industry, and this is true for individual companies as well. So relevance is a key aspect, but not a given. As we know, there are still many so-called protection gaps in the industry. So we're covering, probably roughly speaking, about 2/3 or even less of the potential risks which could be insured. So there's a lot of work to keep ourselves up to date and try to tap into these protection gaps. So in spite of our expertise and capital, we see a lot of risks which are either not insured or underinsured. If you think of climate related risks, when you have a major disasters like the wildfires in Los Angeles earlier this year, or any other big shock on the NatCat side, you see that protection gap. It's a good proportion of economic exposures are just not covered by the industry. So there are many reasons for this. But the public perception, which has not, never been extremely positive about insurance, there's this negative bias, is of course not helped by the fact that protection gaps remain very significant. So I think that's a common cause. If you want, as an industry, we need to look into that and make sure that we continue to get so-called, societal license to operate, so that people have more trust in the insurance industry, and the reputation generally can increase. So I think that's the main challenge. It's not an easy one. It's a multifaceted one, but that's the one which individual companies in their respective roles should address.
And obviously that role of insurance as an enabler in society to absorb risk and allow the companies and individuals to thrive is probably what attracted many of us to the industry.
Yeah.
In your experience, how frequently is that actually a priority at the board level?
So I think at a general level, board discussions can certainly look into this, and there are good discussions around the opportunities to tap into these growing protection gaps, but also challenges. And I have to be fair to the industry in saying that the challenges are very significant. I think regulatory complexity, the fact that there is intervention in pricing of the risk is a big issue, which increases uncertainty, but also the cost of doing business. I think accumulation risks is a clear impediment to closing protection gaps. If you see concentration of values, like Florida or California, that's a clear one. But also cyber risk, where concentration, accumulation risk is a concern, which makes it more difficult to grow the pie and make it an increasingly important market. So I think there are a number of challenges we need to tackle before we can go into action mode. But action mode for me is all about innovation. I think there is an opportunity for the industry to think a bit outside of the box. First of all, by looking into the risk landscape and see not only how many additional exposures are coming into our books, but also how many opportunities are being created. So that's an important one. The other part is to look into what the clients want. And of course, you cannot be client-centric in the sense of saying yes to everything the clients say. Sometimes it's just not cost-effective or profitable. But I don't think as an industry we've spent enough time to look into what the clients really want, and that means that we need to look into simplicity of products, transparency of coverage, tailor-made solutions to access some of the risks. and to acknowledge that there are structures which require new solutions. So that work, I would say, is still in front of us. There are many success stories, there are many good examples, but as an industry globally, I would say that we have still some work to do in that area.
Yeah. So you've talked about product innovation in that sense, right? So like how can the industry offer products that better address kind of the needs of the customers?
Yeah.
But I guess that addresses part of the relevancy, which is the kind of the offering. But there's another side of the coin, which is the affordability, like how we make those products affordable. Did you see that also as an issue, and how is the industry reacting to be able to address it?
Certainly affordability is a growing challenge to the industry. Part of the concerns and hurdles I've mentioned earlier are applicable. It is difficult sometimes to make products affordable because of the concentration risks or the lack of prevention or limited prevention. If you think of infrastructure updates, upgrades, generally this is something which is lagging behind because public budgets are limited or reallocated to other segments and sectors. So we have a big challenge, but the affordability and growingly availability, by the way, may be a problem. So we need to speak to the stakeholders, be it regulators, be it government, to discuss prevention. That's the one which is a common task, so that we can really push the frontiers of insurability. But we have our homework. I mentioned innovation, but in a way, it's not only product innovation. I think it's also process innovation. If you think of the cost of doing business, even if it's fueled by regulatory complexity in particular, you can see that the insurance industry remains relatively costly. There's a lot of legacy expenses to manage through that, and beyond the price of risk, where we have an argument where your risks are increasing. There is a cost of doing business which is increasing as well, and I think the industry needs to work towards being more cost effective, leaner, more agile, more adaptable, and I think process innovation in that sense is important. How do you make sure that the customers has a very fast and effective process to manage claims, to respond to inquiries, and to be more client-centric in our dealing. In the primary space, of course, artificial intelligence will help in improving the customer journey, as we say. But I think there is a lot we could do a bit beyond looking at the real, price adequacy of the exposure we're taking, being more, leaner, more effective and efficient industry. So a lot to do. It's not to say that we're alone. I think it's much more complex than that. But let's look into our homework while we're asking other stakeholders to address the need for change that would give us more legitimation, if you want, to have our voice heard on resilience, on how to make risks affordable and available. So we need to raise our voice, but we need to do our homework at the same time.
Yeah, and often the way I think about affordability is ultimately you need to reduce the combined ratio, or right. That is, it's not like insurance companies are making too much money. It's like the only way to make it more affordable is by reducing the combined ratio, which ultimately make products more affordable. And I think what you described there's product innovation that hopefully will expand the pie, but also make, to some extent, improve the loss ratio. But there's also how do you reduce the expense ratio, which, as we know, is it's extremely high in the industry to the point where it's sometimes not fair to the end customer. And I think that is where the process innovation that you were describing probably has the biggest impact.
Exactly. I think that there is a direct impact, which is of course that the cost of insurance is decreasing as a result. But the indirect impact is that people working in insurance companies can do something else than admin, because it's a very bureaucratic apparatus, often, particularly in larger companies. And many, many clever people working in this industry, but they spend too much time in bureaucratic processes, and this needs to be streamlined, eliminated whenever possible. There's a need for checks and balance. Of course, there is a need for compliance, clearly, but there's an awful lot of non-value adding activities which prevent employees in insurance companies to do what they should be doing, is looking for new businesses and nurturing the client relationships, making the client journey easier, creating retention and loyalty. There's so much we can do, but there are thousands and thousands of people who are filling forms the whole time. And I think technology, frankly speaking, can address this. So let's go for it and embrace technology for a good purpose, which is getting closer to customers and hopefully closing some of these protection gaps.
Yeah, definitely. And you mentioned bureaucracy, unnecessary filling of forms, and kind of low value activities that don't really drive value to the end customer. And you also mentioned AI, which sounds like one of the solutions to address that. So in your current role, as you look at across the value chain from brokers to insurers to reinsurers, what is the pace of adoption of AI to address those that bureaucracy? Are we making enough progress? Are we making different progress at different stages of the value chain? What's your view?
So I've been paid all my life to have the critical view and to say it's never good enough and it should be faster. And in my current roles, I still have a little bit that bias that we should get faster. I think it's more complex than we think, but when I see the number of opportunities which can be tapped by artificial intelligence, particularly in the area of automation of processes, as I mentioned, in the primary space, and having customer assistance, which is easier to handle in case of new businesses, expansion of businesses, claims management, and so on. When I think of enhanced underwriting as well, where you can get much more information, richer data to assess and price risks, I think there is a huge opportunity for the industry. So when you look at this opportunity and you see the progress made, you can only conclude that it's not fast enough. And I understand the impediments. I was part of it for many years, and I see the day-to-day business taking precedence, and these innovations not feeling like top priority, but I think it needs to be top priority. And when we talk about technology and artificial intelligence, I say that in a self-critical way. We need to make sure that this is on the agenda of the board, of the executive board. It's a common task to make progress. And we should never delegate these topics to the chief operating officer or the head of ITs. Not being disrespectful to COOs, Juan, but it needs to be a shared task. We need to streamline the operating model. We need to be more customer-centric through technology. And that's something which everybody, particularly top management, should embrace.
Yeah, and so most of my professional career in insurance has been with carriers, on the carrier side of things, where you see exactly what you describe of creaking of data points from submissions documents into putting your rating engines or your policy admin system or whatever it is. And recently I was looking at a demo of a broking management system of how, like, what is the day of the life of somebody working in a broker, right? And they were explaining how for some lines of business they have to manually key over 800 data points to even create a submission. So if you almost like step back, and I think I think your perspective now is extremely relevant. If you step back and you position yourself as a customer, and if you knew there's a broker who is rekeying 800 data points into some sort of document that then gets sent to an underwriter who's rekeying the 800 data points somewhere in their systems, who is eventually passing that into a reinsurer who's doing the same, I think customers would never understand, like, why.
Yeah, yeah, and
And
absolutely.
yeah, and I think this is why. Well, obviously, I mean, I'm obviously biased, right? But AI has such a big potential in the industry to rethink. Obviously, it's not to just improve existing processes. It's just step back and rethink, like, how are we actually, are we doing the right thing for the customer, or are we just transacting risk just because that's the way we've always done it?
Yeah, absolutely. No, I agree. I mean, the other day I booked a room in a hotel and had to key in some information on a form and send. And then I come to the hotel reception on the day, and they gave me a form and asked me to fill in the form. This is probably the way some insurance customers might feel at times. So that's something we can eliminate. And this is efficiency, improving the cost of doing business, and improving customer loyalty. That's simple in practice, in theory, more difficult in practice. I completely get it, because we're a regulated industry, and because we have all this legacy to manage. So it's not only about new business. It's, how do you transform the business model? How do you make sure that all this knowledge in the company remains, that you can upskill people? There's a lot of training involved so that people can adjust to these changes. So it's not without its risks, without disruptions, but the end goal is clear. It's making this industry more relevant in the end, and tackling these gaps in the protection we need to bring to communities, to families, to businesses. So this is crucial to the role of the industry.
Yeah, and if you think about this concept of addressing relevancy through reimagining how the industry works, even if you don't say the name, but of the insurer, broker, or reinsurer, like, have you seen any successful company in the industry really rethinking the operating model and thinking, like, okay, we should work in a different way, and really making progress, or is the change still quite incremental?
I have seen a number of cases where I was very impressed, particularly by the determination of senior management to make it happen, and use technology for better data management, better efficiency. So there are companies which are clearly in pole position and doing very well, but it's not the majority by any stretch of the imagination. I think the bigger group of companies is still struggling with these issues. So we're not we're still in the middle of the journey. There are encouraging examples, but if I was to compare with the banking industry on this aspect, there are many aspects where insurance looks a bit better, but the banking industry looks better in that respect, because they had to face these challenges a bit earlier. There was more sense of urgency, and the customers pushing more. That's probably one of the topics, is that insurance will never be an object of desire. It will always be an object of necessity. So we should not try to make insurance sexy. It's just the ease of doing business, which is important. And that's how you create more business and loyalty. But the banking industry had the pressure from regulators, but also from the customers, saying, we need a different way to interact. Otherwise, we leave. In most cases, individuals, they shy away from changing risk carrier for a few bucks difference. So there's an inertia from the customer base, which has to some extent cemented a bit of a status quo mindset. But this is changing because the new generation is much more focused on technology, and they will say, sorry, this is not the way I want to buy this product. Bring me another way. And this is where the contenders have an opportunity, or those insurance companies, incumbents who embrace change and take the learnings and go for that change journey. But these things will change dramatically. So far, customer inertia has been a bit of a helpful toolkit to say, it's not so bad. But the customers will raise their voice in the next decade or so.
And you're talking about inertia, you're talking about new generations coming in. At the end, all of this is like, what is the role of culture in transformation, right? How, like, is culture a key element in achieving the relevancy and affordability aspects you've mentioned?
Yes, I definitely think that culture is a key component. There are lots of technicalities. We talked about technology generally, but there are cultural aspects. I mean, if we think of innovation, you will very seldom have an organization which can be innovative and has a command and control environment. So that's the first thing to tackle. How can you make sure that creativity, innovation happens everywhere in the company, not in an innovation unit, not at an innovation workshop, which will be held once a year or so. It needs to be pervasive. People need to think about ways to do things better, smarter, leaner. Think about innovation in terms of efficiency, effectiveness, and customer satisfaction. So you need to lead companies in a different way, and some are doing this very, very well, and give some level of empowerment to their team, foster curiosity, reward experimentation. There's a lot of test and learn which is going on, but the corollary is that you need a lot of transparency. So if something goes wrong, that you learn very fast and can correct if a change is not bringing the results we aspired to. So a lot of bringing more cross-functional, cross-geographical collaboration, foster a culture where people really reach out, and killing all these silos or the silo mindset, which can occur sometimes. And this is how you get a little bit more traction in finding new ways to be more competitive in the end, and to grow. I think it's about growth and profitability, competitiveness, and then tech fluency is a prerequisite. I mentioned upskilling. I think we need to think about how current employees can adapt to these changes and embrace technology, understand technology usage. But in any case, innovation, even if it starts at the top in terms of signaling and role modeling, innovation needs to be ingrained in the whole organization, and every employee of any organization needs to think, I'm in charge of innovation. That's the cultural change, which is, again, easily said, not so easy to implement. And I don't pretend I managed that. I tried hard in my different roles, and it's a permanent construction site. But I think it's important to keep that focus.
And do you see, just looking at a number of appointments in the last probably 12, 18 months in the industry, there's been quite a lot of talent brought in from other industries. I would love to hear your thoughts on, can you drive this cultural change from within? And probably the answer is neither black nor white, right? But like, or like, what are the potential accelerators of that cultural transformation?
No, it's clearly both. I think you need to have an engaged organization with people who understand the challenges, understand the opportunities, and connect to the respective strategy of the company. So there's a lot around engagement of the organization, and then there's this need for impulse to create a bit of a spark, or to have the courage to change organizational design, to change the systems landscape, and so on. And there, of course, you need to have people from the outside bringing an outside-in perspective, bringing a fresh perspective, also new skills. And this is the one which is not easy, because the tech industry, frankly speaking, pays much better for data scientists, as an example, let alone artificial intelligence experts. So there is a need for the industry to attract people with that knowledge, but without the same salary package, which is not an easy endeavor. And we're back to the mission of the industry. I think if you can attract people by also saying money is important, but there's a societal relevance of this industry, which is very great, that can be helpful in attracting great talents who might have worked in the tech industry rather than in the insurance industry. We need these people. We need some of these talents, and companies need to attract them as they embark into their own change journey. So it is a bit of both, Juan, clearly. And I remain optimistic. I don't want to sound too critical. I think we are in a construction site today as an industry. We know well that change is coming, and now it's about getting a bit bolder and execute on the necessary changes. But I remain very confident about the value add of the reinsurance and insurance industry and the broker industry, and I do believe that we have a lot of cards to play to tackle these protection gaps, and to kind of renew a bit that original idea that we're here to create a more resilient world, which is important as volatility is increasing, as we know.
Okay, I think that is a great message. To get to the last question, I like your message of, it's a construction site. We need to acknowledge it's work in progress, but there's very positive signals that things are changing and the industry is evolving. So anything else you wanna mention before we close up the episode?
I don't think we missed on any of the important topic. Juan, thank you again for the opportunity. I think for me it's important that we all acknowledge that the world of risk is changing, and I think one of the aspects is to look into technology and to embrace technology, and make sure we can leverage the knowledge for the benefit of the industry. That's really the key message I wanted to bring. But I think we covered the ground very, very well, and I'm grateful for the opportunity.
Well, thank you so much, JJ, for joining me. It's been extremely insightful. It's always a pleasure talking to you. So thank you so much for joining me today.
Thank you.